Guys, welcome to Forex Success. Okay, this is a replacement video for the one I did before. It was monted. I didn't know. For you, I'm very sorry for that. Okay, guys, this is the information. Crash 500 in this. That is what I want to show you how you can trade it, of course. So guys, I'm already tired, but I'll just try and do the video again. Crash 500 in this. Crash 500 in this, and I ended up closing the trade on loss. Look at it. I lost almost $12 on the trade. Good. I'll show you why. I got my analysis that the market is gonna sell, and of which is going to do. It's gonna sell, but because I didn't wanted to let the trade hold on to loss for long, I just had to close the trade and enter when it's the right time. And also, I don't trade on Sundays. That's also the main reason why I closed, because I just saw the movement and I was like, okay, let me just join it to come to the downside. Guys, look at where my analysis came from. First of all, I will show you, and if you put interest on this, you will learn some tips in order to use to analyze your market. There are some price action tips that you use to analyze your market. Addition with our amazing strategy, guys, you'll be profitable. So please just stick with me. Like, watch this. At this point, we can see similar movements here that happened right here. We're seeing the similar one here. Okay, and now this is a downtrend. We can as well say this market is retesting. Okay, good. Let me give you the great. So this view will be better. So okay, let's see the market like this. You can see, guys, so you can turn your screen so that you also see it this way. You can see, guys, that from this chart, look at it, from this chart right here, the market came down. It's retesting and it continued the downtrend. It retested this, so we can mark this out as a resistant level. These are things you need to do when you want to analyze your market. You set up a resistant level. This is a resistant level, guys, that I just marked out right now. I marked this out as a resistant level. Why? Look at it. It has held the market. The market tried to break through but could not. Came down for a downtrend. This is a support level. The market came here, went back to the upside, retest this point, this previous level, and then come to the downside. Now look at where we currently are now. What concerns us, look at it. There is a support level right here. This is the red line I marked. The market hit the support level, unable to break through, went to the up, came down, up, came down, and up again, guys. It's up again, still trying to break through but could not. Remember, this is the daily time frame. Great. So me entering this trade, my analysis was that this trade is gonna sell to the downside using above this week. I hope you guys can see this small wick. You know what wick is? Look at the wick. Look at the wick. This line after a candle, that is when price went to before and came down again. It ends leaving a wick there. That is a wick. Okay, look at it. So my prediction is that the market is gonna sell back to the downside, similarly to what happened here. So I sold it and then I closed it because I realized that, first of all, I don't trade on Sunday, and I realized that the next candle, that this movement might actually start favoring me by tomorrow. That is in the sense that it can actually close today still a bullish candle, and then tomorrow candle will start coming to the downside, but it will go up a bit because it might want to form the similar wick. This is the wick I'm talking about. Let me zoom it out. Great. This is the wick I'm talking about. Look at the wick, guys. This similar wick, this long line right there. So forming this line means the market will go up a bit, so that should be a perfect entry for me. That's why I closed that trade, so that I will have to enter when it's at the top side. Great. I'll zoom in again. So having gotten that, that was a reason for me to sell. Not just that, I went to the 4 hour time frame. Guys, please take note of these things I'm saying. I believe when you want to place your own trade, you should also put these things into consideration before trading. Remember guys, on the daily time frame, I marked out this support, the support and resistance level. Look at it, and the price has been moving within the support and resistance level, up and down movement. So from the 4 hour time frame, guys, you can see that you can place a say on crash 1000 right now, expecting it to move to the downside and keeping a stop loss above this previous week. As good as that. Always trade with stop loss. Very important, because trading is all about probability. It might go your way, it might also go against you. So there should be a stop loss here, and then you predict that the market should sell to the downside. Great. Now look at similar movements. I know our moving average, our strategy, which indicates that the blue moving average should cross above, sorry, the moving average should cross below the chart, and the MACD above the zero level to indicate a buy. Great. Look at it, it's already happened, and then it has crossed above, and then we've gotten a buy. So probably this is time for it to sell. Look at the similar movement here. It crossed below, right? So it's already bought. A lot of people must have making money from here, but now it's time for it to sell. Remember, this is a consolidating market. The market is consolidating. You won't expect the MACD to immediately tell you where the market is going to move to next. On a consolidating market, it will need a trending market to show you, because it will take some time before it will actually be able to point the side that the market is moving to. Look at it, it crossed above here and then it sold. Imagine this market continued from here and keep giving us a zigzag move. It won't, the MACD will, the moving average will not be able to give you a definite direction for the market. And then right here, the same thing is happening right here. It's not able to give a definite direction because of the up and down movement we are getting right now. And you see this, guys, similar to this, it crossed below, and then we're expecting a sell based on our price action. So here's the difference between the trading price action and indicators. The indicators, you are actually sending this MACD, like you're sending it to, okay, that will explain better on the 1 hour time frame. I'll take this back again to the normal way we trade. You can see, okay, let me bring it back, sorry guys. 1 hour time frame, look at it, it's also moving. But I think, guys, you got the two reason why we're placing a sell for crash 500. Let me just recap. The two reason is that the daily time frame, which is already on a downtrend, we're expecting it to sell. Similar thing for the daily and the 4 hour time frame. So that brings us to the 1 hour, the 15-minute time frame. Like I said, please turn again. Like I said, guys, the 15-minute time frame is what I usually use to place trades using this amazing strategy. Like, if you don't know how to use the strategy, I'll just immediately explain. When the moving average crosses below the chart, it crosses below the chart, and the MACD is above the zero level, it indicates a buy. And look at it, we got a massive buy using the strategy. So to sell with this strategy, the moving average just need to cross above the chart and the MACD below the zero level. You place a sell and then you make profit. As simple as that. And again, right here, the moving average cross below and the MACD above the zero level to place a buy. Great. So guys, now remember our the general prediction, which is from the daily time frame and 4 hour time frame, says that this market is gonna sell, and we have a surplus, remember. So now the 15 minutes time frame is giving us a reason to sell, that is crossing above the chart, moving average crossing above the chart, and MACD, sorry about that, the MACD is yet to go below the zero level. So this brings you back to the same reason why I am still waiting on this strategy to give me a proper reason to place trade. Guys, for me, listen, for me the perfect time for me to enter this market is gonna be by 3 a.m. tomorrow. Yes, tomorrow, to enter this market, because I want to keep it till it gets to at least this support level. Great, just that way. So 15-minute time frame, guys, but that doesn't mean you can't trade it right now. You can also trade it right now, because probably you might just want to take it for some few times, like from the market to move to this side. But remember the rules of the strategy: when it crosses above, you place a sell, and when the MACD is below the zero level, you can place a sell and then keep your stop loss above the moving average. Great. This is how you can analyze the market with price action and indicators. Guys, this strategy is very powerful. I'll show you the indicators for the strategy. The first indicator is the moving average. Guys, please take a screenshot. I'm already tired. Just take a screenshot of this, which is period 40 moving average. Simple method, simple, apply to close. The star is blue color, 2 pixels, sorry. And the next indicator is the MACD. Fast EMA 12, slow EMA 26, MACD SMA is 9. The main and signal color is blue and red. Take a screenshot also, guys. Done. Great. So this is the indicators for the strategy. The strategy also work on other synthetic indices like volatility 10, volatility 75. Look at it. Like at this point it crossed above and then it's sold. Look at this. This is a total consolidating market. Let me show you with this side. It's a total consolidating market. Look at it. It crossed above, sold, but not that much. So on a consolidating market, the indicator is not that fast to give you a signal. I will explain. Let me go back to crash 500 and give you a better explanation on that. Look at it, guys. From the 4-hour time frame, and also 30-minute time frame. Great. So with price action, you will be able to understand. I'm going to bend it this way. With price action, guys, you'll be able to understand that crash 500 is going to sell. But with indicator, you will see and also with indicator, you understand that it's going to sell. But price action will give you the signal faster than indicator. I will explain that. From the 4-hour time frame, look at this, guys. From the 4-hour time frame, great. From the 4-hour time frame now, which we are, guys, please watch this so you might not get this kind of video every time. From the 4-hour time frame, you can see that the market, based on our analysis, it's going to sell. Having a stop loss above this week, it's going to sell to the downside. But the indicator is yet to give us that signal that it's going to sell until the price come down and then the moving average cross above it before it will give us that signal. So it's actually later than the price action. Price action is like you are going to ask the market yourself, where is your next direction? Then the market will tell you directly, which is more faster than you sending this moving average to go and ask the market where it's going next, where it's its next direction. So it will actually take a longer time for the moving average to deliver your message and bring back the response to you. You get that, guys? So that's the difference. So combining both will actually make it more favorable for you, especially on the shorter time frame. Indicators are actually better on a lower time frame, like 15 minutes and 5 minutes, because there might be a lot of confusing candlestick pattern, chart patterns on the small time frame, and they might also neglect and also beat chart patterns on 5 minutes, 1 minute, small minute time frame. On lower time frame, chart patterns are mostly defeated but on higher time frame they actually respect price action. So that's why most indicators we use them on small time frame. So like this indicator right here, this moving average is actually giving us an entry. So once the condition is met, which is when the MACD goes below the zero level, you can actually place a sell. But for me guys, I would say you can place a sell right here. I would advise you can place a sell once you see the, because crash 500, it can be really deceiving. If it moves, it can just move to the upside, and then it actually takes a second for it to spike. So it can actually move, and then a lot of people will be scared. It can actually be going up, and then a lot of people will be scared and start closing their trade. But then for the very last minute, you see spikes that will bring this trade down to this side. That is after you've closed your trade. It happens. So you just need experience and practice. Keep on practicing it, and then you know how the indices, how the index behave. You know how the crash 500 index behave. Exactly like that. When you trade it for long, like you continue trading it, you'll be able to understand the kind of movement it does. That's it guys. Thanks for watching. This is Forex Success. Please subscribe to this channel and turn on that notification bell. That's if you haven't. Give this video a thumbs up guys. I believe this is helpful, really, for those of you that paid attention. I believe this is helpful. So if it's helpful, just what do you do? Just comment down, say thank you Forex Success. That's all I understand. Just comment down thank you Forex Success, and a wonderful Sunday to all of you.